the income statement. So let me just give return inward, which is not there. But always remember, return inwards, you do what? You less, so that you get the net sales. So our net sales remains 1,236,500, and then you less what? Cost of goods sold. So what is our cost of goods sold? From the question, what is the opening stock? 419. Yes, 419,790. So stock 419,790. You add what? Purchases. How much is the purchases? 854,160. You add what again? Carriage. Do you have carriage inwards? So I'm putting this, if it's not there, for the sake of remembrance, so that when you're doing it, you know what is where. So carriage inwards is not there, so you get goods available for sale. So how much is the goods available for sale? 419,790 plus 854,160. What do you get? Twelve 73 950. Is that correct? Or 73 950. Okay. Now we are lessing what? Closing stock. What is the closing stock from the additional information? 563,400. So you bracketed, meaning you're lessing. Do we have a carriage inwards? No, return outwards. So again, remember this, you less. If it happens that in the question it is there, you must do what? You less. So when you less that, what do you get? Cost of goods sold. So what is our cost of goods sold? So 1,273,950 minus 563,400. What do you get? Yes? Mm-hmm. Mm-hmm. After deducting less stock. Actually, they are less at the same time with the closing stock. Yeah. Okay. So what do you get? What is our cost of goods sold? Yes, those with calcs, can you help us? It's supposed to be something. Yes? 700,000. 7 or 710,550. Now remember, this is cost of goods sold, and we said you less. So what do you get after lessing? So you say net sales, which is 1236,500 minus 710,550. What do you get? Five. That act as what? Net? No, gross profit here. This is our gross profit. 525,950. So that's the value that we're getting as gross profit. Now, what are we adding? You add what? Other incomes. So from the question, what is the other incomes? Which are these items of other incomes? There is provision for bad debts. There is provision for bad debts. Now you compare with the provision for bad debts in additional information. The provision for bad debts in additional information reduced provision for bad debts to 3,200. What was it currently from the trial balance? How much is it? It's 4,000, is it? But now the goods which have gone bad is worth 3,200. So are you making a profit or you are making a loss? Is it an expense or an income? Yes, it is an income. Remember we said when the trial balance provision for bad debts is more than the additional information, you get the income. When the trial balance is less than additional information, you get the what? The expense. So in our case, provision for bad debts will act as income. So what is the difference? 800. Correct. Do we still have any other income? There's no other income. So can you total that? You get your net income. So this is what we call net income. So you are getting what? 525, 526, 750. Is that correct? Okay. What are we lessing? Less expenses. All indirect expenses. So we are lessing all indirect expenses. Beginning with what? Now the best way to deal with that, we normally say you go item after item. Like looking at the building, is it an expense? No. Fixtures? No. Provision for depreciation? No. Debtors? No. Creditors? Cash at bank? No. Stock? No. Sales, purchases? Carriage outwards. That is our first expense. So carriage outwards is an expense. How much is carriage outwards? 12,880. Then next is what? After carriage inwards, we have discount allowed. That is an expense. So you go item after item. Otherwise, you will lose track. So it is how much? 1150. Next is what? Loans, loan interest to King. That is an expense. Are we together? Just a minute. Loan from King. Yeah. So that's an expense. Interest on loan. How much is the interest on loan? And then we have office expenses. That is an expense. Office expenses. How much is office expense? 24,160. Then we have what? Salaries and wages. Salaries and wages. How much is salaries and wages? 189, 117. Oh, 170, yeah? What else do we have? Bad debts. That's an expense. Bad debts. How much is the bad debts? 50, 30. Which other item? Provision, we are done with that. Go to additional information. Oh, we have not featured the additional information. The accruals. We have accruals which must be featured. So meaning that in additional information, expenses to be accrued, office expense, we have 960. So in the office expense, we need to add 960. So 24,160 plus 960, what do you get? So this value will change. What do you get? 25, 120. And then wages and salaries, we still have accrual, 2,000. So 2,000 plus 189, what do you get? 190, 191. Correct. Okay, bad debts. No, provision for depreciation. So we have depreciation for what? Fixtures. 10% on reducing balance. So reducing balance means we do what? Fixtures is 110,000, less provision for fixtures 33,000. What do you get? And then you do the 10%. So how much will be the fixtures depreciation? We say you less. Let me write first fixtures. You say the cost, which is the book value, less